Anybody who succeeds right off the bat, and I've come across some for sure. What happens is they always get their comeuppance because what happens is they've usually been, whether the market is in a particular phase that's conducive to what they're doing or something else. What'll happen is every trader it's like a trial by fire. Many traders will have, in fact, it's almost dangerous, I would say. It's actually bad to have success too early on as a trader because the danger there is you can be reinforcing bad habits.
All right, everyone, sitting down today with Andrew Menaker. We spoke a few months back, maybe it's been a few years. Andrew is one of the leading trading psychologists out there, someone who I really respect and like to learn from. So Andrew, welcome back on the podcast. Good to have you here. And looking forward to talk about psychology in trading.
Yeah, thanks for having me.
Awesome. Keep you updated on kind of what's been happening since we last spoke a few years back and kind of what you're working on these days.
Yeah, well, I've been super busy. And as you've noticed, and I'm sure everyone else has noticed, there's just been an incredible explosion and boom in terms of educational offerings and trading, which is great because I think people just starting out in trading certainly need a lot of education. But I think everyone starts to realize at a certain point in their journey as a trader that it's not about the strategy, it's not about new setups. It's really ultimately the edge is how well do you execute under pressure.
Do you feel like people are becoming more aware of the psychology compared to maybe 10, 15 years ago? Or is it still something that people have to learn the hard way?
Yeah, well, I think people are more aware of it, but I think it's hard to understand how to manage it because there's some old myths that are still alive. I think they're no longer quite as powerful, but the old myth of don't be emotional, suppress your emotions and that kind of stuff, which doesn't work. And eventually, if you try and suppress your emotions, they leak out anyways. And then you end up doing something you regret later. So the new idea is like, how do you manage your emotions? How do you learn? How do you use emotion as data? How can you see it as information for yourself?
This is something we discussed a while back, probably many interviews ago, probably the first one we did. Tell me about how you connected the dot between trading and mindset. Kind of what brought you to the psychology space in trading?
First began working with traders like 25, 30 years ago. They were institutional bank traders. I was doing consulting at a major bank and I had no experience in trading myself. So I kind of was really green behind the ears. But what I saw firsthand was that emotion, which is, by the way, the word motion with an E in front of it, energy in motion. And what I saw firsthand was that when people are uncomfortable, when they're anxious, when they're feeling FOMO, when they're frustrated, when they're angry, that emotional energy has to go somewhere. And for most traders, that usually means it goes to the buy or sell button. They get in when they're not supposed to get in, or they get out too late or too early. They use the button to manage their emotion. And so that's something I noticed early on. And that kind of shaped my approach to trading psychology, which is learning how to manage yourself so you don't have to resort to the buy or sell button to manage yourself.
When it comes to managing yourself, where does one start? I guess there's a lot of things you could talk about, but probably pressure is one of them. You feel pressure to perform. There's pressure from the trades that are going on that you want to do something about. How do you sort of handle that pressure in the market?
Yeah, well, first of all, you have to know who you are, which means you have to know how do you respond to risk, uncertainty, and opportunity. Are you the kind of person that defaults to being super aggressive? Or are you the kind of person that defaults to being risk averse? Are you the deer in the headlights kind of person? And you're usually not going to be one way or the other all the time, but most people will tend to default to one end of the risk spectrum when things get tough, when they're under a lot of pressure. Most people will bounce around that risk spectrum, but most people will also have a place they typically go to frequently. So if you know about that for yourself, like you tend to overtrade, you want to get your money back quickly, or are you the person that can't handle heat, get out of a trade super quickly just because it doesn't work right away? What kind of trader are you? So really knowing who you are as a trader is really important. You got to start there.
Are there any personalities or traits that are more linked to success in trading as opposed to ones that maybe might have a bit more work to put in first?
Yeah, I mean, there's been interesting research on this. And I know my friend Brett Steenberger writes about this a lot. Things like openness, conscientiousness, curiosity. Also, what's known as the growth mindset versus the fixed mindset. There's a lot of books and information about the growth versus fixed mindset. So yeah, openness and curiosity are really important factors in predicting a successful trader's journey, for sure.
You would think patience would play a bigger role. Is patience a trait, or is it more something you have to work on and develop?
Well, even people who are interesting, a lot of folks who are patient anyways, that come to trading and they realize maybe they're not so patient. There's something about a big candle or the money or, all kinds of factors where people might be patient in other realms in their life, right? But they come to trading and they find that they're not so patient. So yeah, patience is really big, and how to cultivate patience. And there's different approaches. And one of the approaches I've been using now for the last few years is helping people to cultivate what I call an empowered presence, knowing who they are, inhabiting truly who they are, connecting with who they are, and accepting who they are. And that means a lot of different things, and there's a lot of different techniques that go along with that. But it's very different than telling yourself, just be patient. I think what happens is a lot of traders use Post-it notes. They put a little big Post-it note by their trading computer. Be patient, follow your plan, whatever the note says, but that doesn't usually cut it.
Tell me how your approach is different from all these popular sayings we hear about, like in trading psychology. Like you said, follow your plan, be patient. How is your approach different than that?
Well, and I mean, those are all great pieces of advice. I've got nothing against those. The problem is they don't go far enough. Everyone, even if you have a trading plan, first of all, some people don't have a good plan. But if you do have a good plan, then the key is what happens when you veer from the plan? Why do you veer from the plan? And it's going to be because you're uncomfortable. It's because you're feeling FOMO. It's because you just took a loss. It's because you heard about someone else who made a bunch of money and you didn't. Those are just a few examples. There's many examples of how discomfort shows up. So you have to learn, what does discomfort feel like for you? How do you recognize it? How can you really analyze that discomfort in real time? Because there's energy behind that discomfort. Emotion is the word. Motion with an E in front of it, energy and motion, as I mentioned earlier. So you have to really learn who you are and recognize that if you don't manage yourself and understand that your emotional energy is actually information, you'll end up acting out on that emotion. So that's my approach in a big way. And I'll say this, I've also been using more, I've always done this, but I'm incorporating it more and more in my coaching, is using the body. It's not just a mental, psychological thing, the gray matter between our ears. It's our entire bodies involved, right? People talk about the gut biome and the brain in our intestines. By the way, we have more serotonin in our gut than we do in our brain. And using HRV, heart rate variability biofeedback, to calm the nervous system, to kind of quell that fight, flight, or freeze survival mechanism, which is always going to be there. It's part of being human. You can't turn it off. You can't get around it. It's always going to be there. So you have to learn, how does that operate for you, and how can you tamp down the reaction when it does happen?
So what could someone do instead of hitting the buy or sell button and overtrading, getting to all these bad habits? What could they do instead?
Yeah, well, there's so many things. One is doing some live journaling, which is different than journaling after the fact, but having a pen and paper right there next to your computer and asking yourself key questions. What am I feeling? Why am I feeling this way? And being really articulate and honest with yourself. And what's this feeling tempting me to do? Is that something I should be doing? That's one way to do it. Another way is some long, slow, deep breathing to kind of quiet down the nervous system, or some HRV, heart rate variability biofeedback. Another way is it's something you can take from animals, from the animal kingdom. There's something called the physiological sigh, which is where you take a really deep inhale breath through your nose. When your lungs are all filled up, take another quick inhale on top of that, and then exhale really pretty forcefully with your lips pursed all the way out. And what that's called is a physiological sigh. Animals do that when right after they've experienced trauma or danger. It's a way for them to naturally kind of reset their nervous system. And we have a similar kind of wiring. Mammals do, all of us do. So using that physiological sigh can be really helpful too.
If you are enjoying this interview so far, then I think you'll like this one over here. I've been working on this book for a long time called Prop Trading Secrets. It's finally out. You can get it in your favorite bookstore or on Amazon, Barnes & Noble, of course. And this book is really about interviewing traders who are successful in either trading for prop firms or managing their own private fund. We talk about their background, what makes them successful, the things they went through, struggles they had to go through to become good traders now, and a lot of the good wisdom that you might not necessarily hear about, but it's all into a condensed version over here. You can read through these stories, get inspired, of course, learn a lot about what they do, their strategy as well. And we summarize everything at the end where we have a whole chapter of summaries of what these traders have in common. So if you want to check it out, 14 traders in this book that myself and Kathy Lean interviewed. There's a lot of good wisdom in this. If you like these interviews on YouTube, I'm sure you like this one for sure. Go grab it. Like I said, it's on Amazon, Barnes & Noble, it's on Audible and audio version. All the other audiobook platforms will have it too. Or your favorite bookstore. So check it out. If you did read it, let me know in the comment section below which one is your favorite chapter, and we'll get back to the interview. You would think these kind of sites would be more automatic. People would do them on default like animals. Why aren't they automatic?
Yeah, well, I think it's because we live in a culture, right? Capitalism, got to make money, got to be productive. Animals don't have to deal with those things, right? They just go out and hunt, get the meal, feed their brood, and that's good. They don't need to worry about their self-worth is not tied to money like us people, we're humans. Very different.
I'm curious to hear in your years of coaching, what's the internal struggle people have that comes up the most? Is it about what they expect versus what they can achieve, or is it more about something else in trading? What do they struggle with the most?
It really depends on, because I have a lot of different types of clients. So the kind of clients there's some who have never succeeded or haven't had very little success in trading. And the common problem with them usually is overtrading, impulsive trading. Sometimes it's inaction. They don't get in when they should, but usually among the struggling traders, it's usually overtrading. And then I have some traders who are very, very successful. And now they do some overtrading as well, but it's often different for them. Many of them, for instance, might be at a well-known prop firm, or maybe they're trading in a hedge fund pod, and they're familiar. They know everyone else's P&L. Everyone else knows their P&L. And so there's a comparison, a competitiveness to their trading, and they want to be better than someone else, which is takes them off their game. They're no longer the best version of them. And I'll just say that competition is not bad. I'm not anti-competition. It can be really helpful, but it's a double-edged sword. On the one hand, it can be inspirational. You can learn from others. There's some success modeling involved in competition. But on the other side of the sword is that the self-comparison piece. Your ego gets involved. Your confidence can get shot. You start going into style drift. You start leaving what you do well.
You mentioned it's a different kind of overtrading based on what they want to achieve or what kind of expectations they have to compete with other people, as opposed to only themselves.
Yeah, expectations is a really big thing. So expectations works in a lot of different ways, right? In a lot of different time frames. People come to trading expecting they're going to succeed by a certain point, and they haven't. They're really frustrated. Then we also have expectations really right in front of us when we're trading, right? You get into a trade, or before you pull the trigger, you have an expectation of what might happen. And I'll just say, regardless of whether it's a trade specific expectation or just about your own trading journey, that type of expectation, the stronger the expectation usually means there's a stronger emotional attachment to whatever you're expecting. And the stronger the emotional attachment is, what happens then is we can become really rigid. Our ego gets involved, and that rigidity I just mentioned, why I'm talking about that, is this is the basis for confirmation bias. People talk about confirmation bias in trading. Oh, I didn't see that. How come I emphasize this? I ignored that. Well, the way that works, the mechanics of confirmation bias, what's happening under the surface is it starts with a strong expectation, which leads to emotional attachment, which leads to cognitive rigidity. And there you have confirmation bias right there.
Is it a common theme for most traders to want to prove to someone else that they can succeed? Like they want to prove to maybe themselves or someone else in the family or someone around them that they can do it?
That's really common. Like, so for the individual retail trader, right? Whether they have a significant other, a spouse, boyfriend, girlfriend, family, maybe they're adult, their parents, whatever the situation may be, their friends, other traders, even people in trading pods or their accountability partners or whoever it might be in the chat room. Yeah, there's always needing to look good, wanting to look good. And then that's for the independent trader. And then on the, people who are trading other people's capital, prop firms, hedge funds, bank desks, RIAs, whatnot, they have a whole nother level. There's a whole nother level of performance anxiety that enters the picture with those folks, that's probably 2/3 of my coaching practice are those people who are trading other people's money. It's a whole different set of performance anxiety issues than if you're just trading your own capital.
How do you handle that performance anxiety?
Yeah, a lot of different ways. So, first of all, it's really helping them to understand who they are, what they're good at, and then helping them to really leverage that and maximize what they're good at. It's kind of like a good analogy would be like if I was a basketball coach and I recruited a new player onto the team, right? Of course, I'm going to want to help them improve what they're weak at, their weaknesses, but I'm really going to want them to like leverage their strengths, right? To get the most out of them. So that's what a good coach would do is you identify what is your player good at and then help them to maximize what they're really good at. Yeah, you want to mitigate what they're not so good at and help deal with that. But really the emphasis, you'll get more bang for the buck if you help them be better at what they're already good at.
Tell me about those who tend to attach their self-worth to their trading results. Like they had a really good week, they feel really good, a really bad week, feel really bad. How do you get to detach these two things?
I know. I've been tweeting about this recently. It's pernicious. It happens to everybody, myself included. Everyone who trades. I think it's impossible to completely, sever our self worth from our P&L. It'd be nice to not have them connected, but the key here is to recognize that you are more than your trade. Who are you? Right? We have a lot of different roles. Like I'm a husband, I'm a father, I'm a friend. Who are you? What other aspects of your life are important to you? Right? It's not just about the money and your trading success. So that's just one example of it. But it's self-worth and how it gets tied to our P&L is a really big issue. And I deal with that a lot, regardless of the level of trader, right? People who are managing, gobs of money and people who are trading relatively small retail accounts, they all have self-worth tied to their P&L in different ways.
I think, like I said in the beginning, mindset is getting a bit more attention now these days. I think there's a lot more tool available to traders than before in terms of mindset. Do you see any tools or practices that are just not useful for traders? Like they try them out and it doesn't get them any result? Anything that kind of stands out?
Boy, well, there's a lot of just flim flam out there. There's a lot of big promises, a lot of hype, and I think it's really each person needs to discern wisdom from marketing. There's a lot of sexy stuff that sounds really appealing, but I just would suggest that you should see if you can reach out to somebody who's actually used that technique or that strategy or tried that. Can you actually talk to somebody? Is it really working for them? Rather than simply just relying on anonymous testimonials or hearsay or something like that. So you want to find out what's really working for people. Now, I'll say this also, what's going to work for one person is not necessarily going to work for someone else. And so a big part of my one-on-one coaching is finding specific psychological techniques that resonate with a particular client. And that doesn't, that takes more than, a session or two to figure that out. You have to really understand who the client is and then really be able to tailor a psychological set of interventions for who they are, their personality, their past, who they are in terms of, are they trading other people's capital, their own account? What does their success arc look like? Where are they on the developmental kind of, journey of a trader? There's so many different factors that go into it.
Is it also based on their learning style, like how they learn based on?
Yeah, learning style. Thank you for bringing that up. It's a good one. Yeah, very, very important. Exactly. People learn in different ways. One thing that's interesting I'll bring up, this is an area that I work on with a lot of my kind of higher level traders, people who are very successful, professional traders, been around for a long time, is helping them to differentiate intuition from emotion, which is a really big topic. And a lot of people get the two confused because they might appear to be the same. And I've been tweeting about this recently. People should follow me on Twitter. I talk a lot about this on Twitter and how to differentiate emotion from intuition. And this is, like I said, this is one of the big areas that I focus on in my coaching with my coaching clients. The ones who are already very successful, oftentimes they come to me just for that. They want to learn how to recognize their intuition and how to trust it and how to differentiate that from their emotions. So
I hope definitely follow you on Twitter. You do put out a lot of good stuff, a lot of good value there. Andrew_Menaker. I'll put the link below also. People can check this out. It's a lot of good value, so I really appreciate that. So it's basically the difference between trading discretionarily, like you follow rules, but you also use your intuition, versus trading discretionary but without any edge because you're using emotions for your decisions.
Yeah, I mean, I think well, ultimately everyone's a discretionary trader. Even if you're a systematic quant trader, you're still discretionary because you have to choose what kind of parameters you're going to work with in your system. You're also going to potentially tinker with your system, change it, stop using your system. So everyone is discretionary, whether they realize it or not. But those people who don't really have a plan at all, who are just kind of winging it, it's I actually do know some successful traders who can do that, but that requires a lot of experience. You don't just come to that in a couple of years. That takes a lot of implicit pattern recognition, a lot of experience, a lot of understanding risk, and that's not something I encourage or recommend for anybody. It's really only a small number of people that can actually do that.
How would you coach a trader who's like in their personality very, very discretionary? They don't want to put a plan. They just cannot put the plan together. They want to be able to kind of go in the market and find trades and kind of use their intuition for trades. But they're new, so they don't really have that edge of finding trades by intuition. How would you kind of train them to get to that level?
Yeah, well, first of all, we'd have to unpack what are they actually doing, right? And so one quick way to do this, there's a lot of ways, but one of my favorite ways to do it is to have them categorize all their trades into one of four types. Okay, a type one trade is when they do something like they follow their rules or their plan, or they do something that looked to be correct and they got paid. A type two trade is they follow their plan or their rules or whatever it is they have, and they lose money. A type three trade is when they're just completely just blind and they don't know what they're just hitting the button, and they lose money. A type four trade is, they just hit the button impulsively, but they end up making money. So you want to understand how are they making their money and how are they losing their money, which sounds kind of funny, but you have to understand how are you making your money and how are you losing your money. So that's a good starting point for working with a lot of traders, actually.
How do you get to build honesty with yourself on that kind of rating? Because sometimes you could see, oh, this is a good trade because it made money, but actually it's a really bad trade.
Yeah, that's a big one, Etienne. That's a really big one. Self honesty. A lot of times we don't really want to see what we're doing. Of course, we're going to find out anyways when our P&L kind of stares back at us and we look at our statements or account balance. So self honesty is a really big one, right? And a lot of people avoid that. And then what happens is they get slapped. They get hit upside the head because there's the number and they see how much money they've lost. And really, it's because they didn't want to be honest with themselves along the journey. So a big part of, I think, the development of a trader is how honest are you with yourself? And that requires being uncomfortable. It's going to be uncomfortable to be honest with yourself because there's no such thing as a perfect trader. Even 8-figure, 9-figure traders, I've known a few 10-figure traders, they make mistakes. They're not perfect. And it's really how honest are you with yourself around it.
I think you would agree that it's very hard or nearly impossible to train someone to become a good trader from the start, from day one, without having them fail at any point. They got to go through these like bad periods at some point.
Yeah, no, anybody who succeeds right off the bat, and I've come across some for sure. What happens is they always get their comeuppance because what happens is they've usually been, whether the market is in a particular phase that's conducive to what they're doing or something else. What'll happen is every trader goes, it's like a trial by fire. Almost every trader not every trader, but many traders will have, in fact, it's almost dangerous. I would say it's actually bad to have success too early on as a trader because you end up, the danger there is you can be reinforcing bad habits.
So what's the proper amount of failure versus like you could be failing too much and kind of getting hit really hard, then you don't want to come back to trading or something, or it's like too big of a failure versus what's a normal failure for traders?
A normal failure, boy, I don't think I've ever been asked that question. Like, what's a normal failure? Well, I think everyone has their pain point, right? Some people measure it by dollars. I've lost a certain amount of money, or I've spent this amount of time and energy in my trading, right? So, what's that point? It's going to be different for different people. They're going to measure it differently, but I think everyone should decide like when is enough enough? When should I either stop or when should I get some help? What's really going on with me and my trading? I think that's an important question we all have to ask ourselves.
Maybe not the right note to finish, but would you ever advise someone to quit trading, or is there a time where you would tell them to either take a step back, take a break, and come back to trading in a few years or something?
Oh yeah, I have. Yeah, I have. It's definitely. Um, I can remember a client a few years ago who came into quite a bit of money from an inheritance and was just over trading, had no respect for risk, and was just losing money like crazy. And I just said, look, until you can begin to engage in some of these psychological techniques I'm giving you, you're just going to lose your money. And I basically, he wasn't able to do it. So I just said, look, you shouldn't be trading. Trading may not be for you. Maybe you can come around to it down the road, but for where you are right now, you shouldn't be trading. So yeah, those are hard conversations to have. And I've had a few of those with traders in the past.
For the other people who actually go through tough times and want to recover, what's the thing they should focus on if they want to recover from these learning moments, these tough times?
Yeah. Well, first of all, trading is one of my famous sayings that I like to use is that trading is the hardest easy money you can make, right? It can be easy because all you do is hit a button and the market moves in your direction, you make money. But it's hard because it's never going to be consistent. There's going to be a lot of uncomfortableness. So the advice is, know how you make your money, know how you lose your money, and can you face the discomforts that are normal in trading, right? FOMO is normal. Everyone's going to feel it. No one likes to take a loss, especially you take that loss and it turns right back around in the direction you wanted it to go in. We all hate that. That's one of the worst experiences in trading. It's going to happen a lot. So those types of discomforts, unless you know what you're signing up for when you become a trader, you're signing up for those experiences, basically. You need to know what you're getting into.
I like that. That's definitely how you wrap this up too. Tell me where people can connect with you and find out more about your work after this podcast.
Yeah. So my website, www.andrewmenaker.com, on Twitter. Yeah, I may have an IG down the road at some point account, but right now Twitter and my website are the best ways to reach out to me. And I do, like you said, I post a lot of good information for people, helpful tips. A lot of it is from things I've experienced myself, as well as peeking behind the curtain and seeing how people who are really successful, how they operate.
Oh yeah, I followed you for a while on Twitter, and you do put out a lot of good stuff. Also, I'll put the link below for people to check it out directly. And of course, Andrew_Menaker on X or Twitter. It's a good place to find you. I appreciate the time you gave here to the listeners. A lot of good value for sure, and hopefully they can learn from you and apply these tips in their trading.
Thank you. Thanks for having me back. I appreciate it.